Did you experience a painful increase in your home's monthly mortgage payments after interest rates rose sharply post-COVID? I have friends whose mortgage payments went from $6,000 to $9,000. Ouch! What if I told you that there's one country in this world where you can lock in the same housing loan rate for 30 years straight? Not just 3 years, not just 5, but for the whole 3 decades of your loan term, your monthly payment will never need to change. The answer is the United States. That's where I invest, and let me tell you why it's such a game changer for property investors. Why is a 30-year fixed-rate mortgage such a big deal for property investors like you? In countries like Singapore, Australia, UK, and actually everywhere in the world other than the US, banks only let you fix your interest rates for a few years. After that, the rate floats, which means if interest rates rise, so do your monthly mortgage payments. That uncertainty makes it hard to plan for long-term cash flow. But in the US, you can take a 30-year fixed-rate mortgage to buy or refinance a property. And this is not the super rare kind of loan from specialized banks, nor does it come with strict approval requirements. It is super common in the US. That means you borrow money today, and for the next 30 years, your repayment amount is the same no matter what happens with inflation, election, or global crisis. If rates goes up, you simply do nothing and keep your rates. But if rates goes down, you can actually refinance in the lower rates and lock in another 30 years. There is no age limit to taking loans in the US, so even if you are a 99-year-old grandma or grandpa, you can still take a 30-year fixed-rate loans. So if your monthly mortgage starts with $1,000 payment today, after 30 years, your monthly payment is still $1,000 a month. Do you know what this means? Have you heard of the face time value of money? $1,000 in the future is actually worth less than $1,000 today because of inflation. For example, 20 years ago, a bowl of fishball noodles cost $2. Today it costs more than $4 to $5. So keeping your monthly mortgage payments the same over 30 years actually means you're enjoying inflation-eroded debt repayment. Now let's come to the fun part. While rent income and expenses like repairs, property taxes, and insurance will likely rise over time with inflation, your biggest expense, which is your mortgage, stays the same. Let's plot the graph. Rent rises over time, and if all expenses rise over time at the same rate, since it's all due to inflation, your net cash flow is here. But what if expenses do not all rise at the same rate? Your mortgage doesn't change, right? That means that the graph actually looks like this. Can you see that over time, that difference between rent and expenses, which is your net cash flow, is widening? Your cash flow is growing. This growing cash flow together with principal paydown and market appreciation over time is exactly how successful investors build wealth over time. This is why US real estate is such a unique opportunity. You're not just buying properties, you're buying certainty. So if you're exploring where to grow your rental property, ask yourself, do I want a market where the bank can pull the rug under me every few years? Or do I want the one market in the world where I can lock in stability over 30 years and still have the option to refinance if the interest rates goes down? That's the US advantage, and that's why so many global investors, even big names from Singapore like CapitaLand and Mapletree, REITs, are all parking their money in American real estate. What do you think about 30-year fixed-rate mortgages? Please drop them down in the comments below. If you're fired up to learn more about US real estate, we have an entirely free introductory course perfect for you, whether you're an experienced investor or barely starting out. Check out the link below or DM us on Instagram. I hope you enjoyed this video. Don't forget to like and subscribe so that we can keep producing great contents for you. Check out our video here and here. See you in the next one. See ya.